Good morning, everyone. Welcome to day 2 of Provine here at the Spirits Business Hub. I am Melita Kiely. I'm the editor-in-chief of the Spirits Business magazine, and I'm really excited to kick off the second day of talks. We have 5 planned for you today, so I'm hoping we're going to see some of you a little bit later throughout the day as well. Our first conversation is going to be centered around the future of spirits pricing. We're going to be looking at how you can balance brand prestige in a challenging economic environment. We have 2 experienced commercial directors with us for this panel. Starting at the far end to my right, we have Kim Heng TEO, commercial director at El Supremo Rum. And next to me, we have Matthieu Gouze, commercial director for Maison Ferrand. So welcome both, and thank you for joining me today. To begin with, I think it would be helpful to paint a picture for our audience in terms of your perception of the spirits industry at the moment, particularly when it comes to the premium plus part of the market.
It's getting challenging. It's always been, and more so these days. I've had a simple opinion that, among other things, geopolitics, social economic uncertainties and challenges actually poses a lot of difficulties or headwinds as far as spirits, even in the premium segment of the market.
Yeah, and I think 2 things are really happening at the moment. Uncertainty, definitely geopolitics, but also a change at the moment in consumer trends. The consumer are changing a lot. And right now, because of the uncertainty in the market, inflation, recession, wars, everything, I think they want to come back to more like comfort brands, thing they know, and also they don't want to spend too much. They are being very, very careful. So what we see in terms of premium right now, everything above 50 to 60 euro is a market that is suffering a lot.
Okay, that's interesting to hear from both of you. And you mentioned a few of the challenges there that you're seeing. Are they different from market to market, or is it a more global issue that you're seeing?
I think the fact remains that no 2 things are exactly the same. I mean, we are different by design, construct, and default. And because of our own history and background and how we develop, whether economically, socially, politically, it's actually different. So the nuances are there, the degree of challenge are there, the different difficulties, what is more critical, it's probably different. Of course, there are always underlying things like cost, for example, consumer trends, right, preferences and all that. Those remains constant, but there are differences that we need to tackle. But going back to 80-20 rule, you solve 80% of the problem. I mean, or 20% of the problem actually tackles the 80% of the challenges you have. And that 20% is really the commonality. So cost, trends, preferences, those remains the constant or changing constant.
Yeah, and obviously you have many different markets. We see that happening on our side in more mature markets. So Western Europe, the US a little bit. It's less happening, let's say, in Southeast Asia, where market they have different trends, different dynamics as well. Even though China is a bit tricky we make cognac at Maison Ferrand, and cognac is a tough category because of tariffs in China right now. So obviously every market is different, but the main market when it comes to premium spirits, being European market and the US, it's happening quite heavily. In growing markets, again, where dynamics are different, it's a bit better for us, but volumes are also not the same. So,
and sticking with you, Matthieu, and with cognac in particular, we know that it is a tricky time for the category at the moment. So, how much more challenging are you finding operating as a cognac producer in the current climate, and how are you finding ways to navigate those issues?
I mean, it always comes down to our importers, because they are also struggling a lot. Because, I mean, for us, we are ready. we are ready to export, but people are not ready to import because of tariffs. So for us, the best thing we can do is to be out there preaching and talking to the right people, to the right politics, to make things change. But that's pretty much what we can do and be prepared. Then obviously you can always cut down your margin and absorb the tariffs, but it's not sustainable. We know where it ends pretty much. So for us, it's a tricky time in cognac because we have, on one hand, China. It's been a challenge for the last year, and now potential tariffs in the US. We're talking 200% at the moment. So, so far nothing is really happening, but only that knowledge of the possibility of having 200% is disrupting the market at the moment. So yeah, for the cognac industry, it's pretty tough at the moment, yeah.
Yes, I think tariffs is something that everyone is very conscious of at the moment. As you said, we haven't seen it happen yet, the 200% threat. But we actually have a talk on this tomorrow morning. So if you're around, do join us because we're going to be going into detail about that tomorrow. And Kim, coming to you, being in the rum industry, similar question. How difficult is it at the moment to do business and how are you finding ways to navigate the challenges?
Well, I think for the category per se, it's still pretty new. I think there's a lot of education, a lot of bringing the story, the heritage, the craftsmanship, and what's actually differentiating rum from the rest of the brown spirits to have its rightful place. For us, we have realized that in the different regions, there are probably more similarities or homogeneity as compared to differences. So take the case of Europe and Asia Pacific. Even though we probably have as many countries in Asia Pacific as in Europe, or maybe more, in Asia for rum, we find that it's actually a lot more fragmented. The dominance of brown spirits, especially whiskey and cognac, is actually a lot much more rooted. So I think Matthieu probably have a slightly easier time for cognac as compared to rum as a premium brown spirit. The different countries, again, culturally, they are different. And in terms of taxation, the regulation, they actually also are different. On the reverse, on the other hand, we find that in Europe, at least it is a lot more homogeneous. Just like when you talk about America is pretty homogeneous. If you talk about North America, then probably the Canadians will say that, they are different, But in Asia, it's a lot more fragmented and the challenges are there. Some countries are benefit more because of the offshoring from China. And countries in Indochina, for one, is benefiting from that. In Myanmar, things are still up in red because there's a lot of internal strife, right? It's pretty much a civil war. China has its economic situation to deal with. I think we all know there's a lot of businesses, production, everything actually offshoring, all right? Partially caused by geopolitics and, of course, COVID. The very strict lockdown of COVID has actually put off a lot of foreign businesses to continue or to maintain the kind of presence that they have. Yeah. So for us, I think Europe remains the best one for our category as well as our brand. We would like to work with US, provided there are not too many hindrances or obstacles, tariff for one, and we can have a separate session and conversation about that. But something that actually raised alarm bell in me is that the Surgeon General, US Surgeon General, is suggesting to put health warning on the bottles. That, to me, could be an overnight game changer, just like tariffs, all right? Who's stopping you from, why 200? Why not 500? Why not 2,000, right? So those are the things that potentially can disrupt whatever that we are doing as an industry, not even talking about brands and category as a whole, practically overnight. And I always say that good sense and what do you call it, goodness is getting increasingly difficult because everybody is very drawn in. I mean, we just look at our stuff and we are very inward looking. And if there's one message I think we need to, I like to bring forward is that we need to work together more, whether as a category or as an industry. Because only with that, we are ensured of a slightly better or more assured future.
Absolutely. I think that's a great point to make. And I think it's also important to highlight that, yes, there are obviously a lot of challenges at the moment, but I think, like you've both highlighted, there are still a lot of opportunities. And we've heard that in previous conversations. And Kim, you were talking about Europe as a region of opportunity. And I saw you, Matthieu, kind of nod in agreement. Is that also what you're seeing for Cognac and Maison Ferrand?
I mean, the good thing with us, we make cognac. We also do plantation, Planteré rum, and Citadel gin. So, I mean, Europe is our stronghold. It's the main part of our business is being done in Europe. The US is very important to us as well. I would say 35 to 38% of our turnover is in the US, so it's a big market for us as well. Premium rum is happening in the US, but there is something called cover over in the US where the US government is reimbursing or paying back the taxes to Puerto Rico. So they have very, very good prices in the US. So it doesn't help premiumize the rum industry in the US, but still for Planteré, it's a big market. So yeah, definitely. I mean, Europe is a big focus. I think it's a good time to be with our importers on the street, talking to customers, building brands, engaging with consumers. And yeah, this is what we have to do. But when it comes to rum, Europe is by far the biggest market when it comes to premium rum.
Why do you think Europe is showing such an appetite for premium plus rum at the moment?
Historically, historically, Europe was the one continent that was drinking most of the rums, starting with the British Navy, so bringing back the rum into Europe. France always had history with rum, with Martinique and Guadeloupe, and Haiti in the past, before it became independent. So the history, the rum culture in Europe was always very strong. If you look at countries like Czech Republic, rum is the main category. And if you ask why, it's just because in the past they were bringing rum and drinking rum. So it's part of their culture. Slovakia is the same. So sugarcane spirit in Europe was always very, very strong. I mean, Germany as well, they had rum verschnitt in the past where they were importing highest rum from Jamaica and mixing it with neutral alcohol in Germany. So, I mean, rum was always around in Europe. And I think it's increased every year, premium rum in Europe. It's just that at the moment it's the super premium, let's say, is struggling a bit more, but it will come back, definitely.
And we talked a little bit earlier already about absorbing costs. And I'd love to touch on that in a bit more detail now, because we know costs all around us are rising. Consumers are really feeling their disposable incomes being squeezed at the moment. How do you navigate absorbing costs, particularly when inflation is high and there are, we've had supply chain issues that have pushed prices up, wars that are pushing prices up. How as a company do you work around that, and how sustainable is it to take on as much of that as a brand before getting to a point where you have to pass it on to your consumer?
I mean, at the end of the day, the consumer always decides. So, and you cannot fight it. So at the moment, we as brands have to adapt. So it's either working on our price build with distributors. We're an independent company, so we have more flexibility, let's say, in terms of what we can do. So it starts from talking to our suppliers, bottle suppliers, label supplier, all of them, because they feel it as well, especially in cognac, where everything is stopping at the moment. So it's to work together, so you can work on the price builds along with your importer as well, to absorb most of the costs. But also it's to have the flexibility to create new products. that are more in line with the new trends in the market. And that is something we've always done with Maison Ferrand when it comes to gin, rum, cognac, or liquors, to be very agile and to be very open to the market and to understand the market. And that you can do when you are in the market, when you're talking to the customer and you are trying to be proactive in the trends. So that's the best we can do. Then if we were only like the price is going down, we're cutting our margin with existing portfolio, I mean, you end up destroying your brand and your profitability. So this is how we try to navigate with Maison Ferrand.
I think for us, it's very evident that you have to give the buyers, the consumers, the trade, the belief, the trust that the brand is providing not only a good quality, but an experience that can be shared, that can be remembered and enjoyed, of course, as regularly as you can. Product and services, optimizing, finding the best value, taking a longer term view, and perhaps maybe even coming together with like-minded or brands and producers having the same challenge to try to find greater economy of skill. Because like I said, I believe that with closer collaboration, there's nothing that you cannot overcome. It's just that for all intents and purposes, we tend to take a shorter view of a lot of things. And especially if you are listed, you're a public company. I mean, your numbers are being looked at every day, every hour, But for those of us who are fortunate not to be that accountable publicly, there's an opportunity for us to come together to work, right? Our brands are having realized savings in making longer term contracts and bigger purchase. And we do that with the belief that things will get better, all right? If you look at the entire spirits business over the last 20 years, all right, the long-term trend is up. It's always been up. It's just how steep that curve is, right? So it's riding through the difficult time, right? Working closely with your partners, like, looking at the price value and everything, making sensible savings. It's just not just cut everything and then hope that things will improve.
Absolutely.
But at the same time, you need to build that trust and belief and give that value, the equity that the consumers are looking for. And that actually is the biggest challenge, because the rest of the things is like you can make your format smaller, like, down to 300 or 200 or whatever it is. You can make your paper thinner, your glass, more, eco-friendly, stuff like that. I mean, those are things that you can do. But the biggest challenge is always in the mind of the consumer. Why would they want to spend 50 euros or more, right? So you have to give them not only the reason, belief, but you also have to build the experience for them. And it's an ongoing thing, both online and offline. And that's something that we are working very closely on. And like I said, I think some of the folks in the industry probably will be surprised that we are actually having up on our investments, because it's time when it's challenging and difficult that when you spend the money, it actually goes further. When everybody is busy spending money, it's very noisy, it's very cluttered, right? So it's a bit contrarian, but I think the bottom line remains is that we see the future as being bright. We see there's a future for super premium, even ultra premium rum, which we are working on. So currently, our highest age is 18. Before the year end, we should be ready with our 25 euro, and the sky's the limit. So we will work on that direction. In terms of pricing, again, everybody pretty much will agree that the middle part of it is actually kind of holding out. It's polarizing. Everybody is going this way, But for us, being a premium, super premium brand, we are actually moving upwards that way. Yeah.
And you've both mentioned that kind of middle section kind of being the part that's suffering, people, as you say, polarized, moving towards the more expensive brands or moving towards the more value-driven products. Do you think that's a long-term trend that we're going to see, or do you think we're actually going to see a return in that middle section earlier than we are expecting?
Hopefully it's going to be short term. No, I agree with what you're saying. Super premium is still doing actually well. We launched the 40 years old rum, and it was sold out in 5 minutes pretty much. So people will still have money to spend for expensive spirits. But to your point, everything between, let's say, 25 to 50, 60 euro is the red ocean, is where everyone is making his business pretty much. So hopefully it's not going to be a long-term trend. We'll see how it goes. And again, coming back to what you were saying, it's very interesting because for the last 15 years, all the brands, all the importers, we've only seen growth. And if you look at it in the market, you don't have so many importers that were, working back in the 2000s or the 1990s, where time was more difficult. So, it's always up and down. So I think, again, now it's about navigating, trying to be different, trying to make sure the customer, when he drinks something, doesn't feel like it's, he needs to understand it. When he pays something, he's going to have his money back, pretty much, his return. So hopefully short term, we don't know because, Trump is going to be here for the next 4 years. So, we never know with these guys in the US, but we'll see. I don't know what you're thinking about it, but.
Well, I think I said earlier, just expect the unexpected. Yeah. It just reminded me that for us, we probably do need to pay a bit more attention to contingency planning. Because if we can see some of the things that are actually happening, including tariffs among other things, you need to have an idea or plan or what to do. Rather than when they happen, it's like, okay, what are we going to do now? So in terms of risk management, contingency planning, I think we probably need to put a bit more thought into that. But again, it depends on how big the flux is, right? 200% is radical, but if it becomes 2,000, what do you do then, right? We have to be prepared somewhat. At least we know what to do. But we cannot be planning for all the contingencies. Yeah. Then again, if you are anchored and know that the future is going to improve, it's just a question of time, then we, as a brand, as a company, would then have to pace ourselves. You cannot fight everything and anyone. All right, you have to pick your fight. You need to take a position. There's only so much you can move back. All right. So it will come a time where you say this is a line in the sand. You'll not move back anymore. But again, I think this is an opportunity. Chinese, we always say, danger is an opportunity in itself. So when we encounter challenges, if we can hold our ground and actually pull forth, we'll probably be in a slightly better position when things improve.
And I think for companies like us, we have that agility to understand the market and adapt. So for that, it's a big opportunity for us because bigger groups that are listed on the stock market, they don't have that flexibility and that agility. So I think we can find many opportunities right now in the market. We just need to be flexible and agile. Yeah.
No, I think that's great insights and advice from both of you. And are you finding that you're actually having to do more short-term planning rather than long-term planning, kind of given the volatility of the market at the moment?
Again, we need to be agile. So, short-term wise, a budget is a 12 months planning. So you need to have a short-term vision of what's going to happen. And you have to look at all of the scenario. But again, to your point, we need to have a long-term vision. And I agree. I think long-term, market's going to come back. But we need to be realistic about the financials as well. And realistic about the market and how it's going to affect the bottom line of the company. So we need to have that short-term vision of how we're going to do it. Let's do the right investment, even though we don't know yet what they are going to be. But the vision needs to be still on the bright side and looking at growing the brand, growing the category. And obviously cognac is tough, but rum has so much potential worldwide, in Southeast Asia, in the Pacific, in Africa as well. So I mean, for that category, gin as well. I mean, gin, we see super premium gin suffering, but people are still drinking gin tonic. So there are things to do.
For ourselves, I think in terms of short-term mid to long-term, I mean, in previous incarnation, I've done long-term plan up to 10 years, which in this day and age is actually nonsensical. I would say that in this time and age, a long-term plan actually is anywhere between a year to 2 years, given there's so many changes. So in that regards, some of the things we do might end up looking very short-term as compared to the past, because time has been compressed, space and time has been compressed into this phone or tablet or whatever it is. So being reactionary is one thing, right? I mean, you have to do what you have to do, but keeping an eye on what the future is going to be like. So while you can scale back, you can reduce, you can lower, you can slow down or whatever it is, but don't put it back to a stationary stop. Because when you want to start again, it's going to be tougher and it's going to be more expensive. So you can reduce, you can slow down, but don't stop completely. All right? Pick and choose where you want to put your eggs or where you want to put your mouth and your money is, right? And, work really hard, right? Of course, probably for us, instead of putting 22 hours, we'll put in another extra another hour, 23 hours a day, to try to make things happen. That's probably the only flexible part in the whole resource mix. Yeah. But if we have the intent and belief, all right, we persist at it, I'm sure we'll get there. It's going to be bumpy, right? Yeah.
And especially for us as producers, aging spirits, you need to have a long-term vision. So we need to buy more cask, age more rum, age more cognac. So if we believe everything's gonna stop, what's gonna happen? So for us, right now, long term, we're still aging a lot, putting a lot of stock into cask, believing that the next years are going to be better. So yeah, I mean, again, short term, we have to adjust, but long term, there are so many things that we need to keep on doing for the company. So.
And in terms of your brand message and storytelling, do you find that consumers are still looking for qualities that are typically associated with more premium plus products like provenance, heritage? Are those qualities important, or do you find that it is more price driven?
That's a tricky one. Again, it depends. It depends how mature you are. If you talk to in France, Germany, you talk to wine shops, liquor store, it's important to them. They need that added value. If you talk to buyer in supermarket, it's all about the price. So it really depends what's your route to market. If you talk to the on-trade, heritage, craft is still very important. And I think right now what we see is that in time like that, they want to have the price and the quality, but it's still very, very important. If you look more at the bigger market, so supermarkets, grocers, is all about the price at the moment. So it depends pretty much where you're playing. But for the liquor store, on-trades, bartenders, they still want that heritage and quality. They need to trust the product so they can really push it in their store. That being said, in any store right now, again, anything above 50 euro will not sell. So they are just adjusting their stock to the reality of the market, but they are still, looking for quality products with heritage and story and yeah.
Again, back to the polarization of the market or all the consumers. I think on one extreme, it's actually value. So this is where things like hypermarket, everybody wants to buy, a rum for a liter for less than 5 euros, for example, right? Then versus that of brand and equity, right? So in terms of brand and equity, frankly speaking, it's actually a long play. Again, like I said, value you can switch on and off, all right? You can make no profit or you take a hit or whatever it is, and that's actually very short term. But when it comes to brands, all right, it's a long play. You're talking about uniqueness, you're talking about heritage, you're talking about craftsmanship, right? And so on and so forth. It's a different. So depend on where your product or brand sits, you have to take very different route. Let's say if I'm a mass producer of rum, right? I'll try to get my rum down to the lowest cost possible. And when it gets lower, I'll find a way, even another way to get it lower, right? Because I know that for the hypermarkets, supermarkets, that's the only thing that, triggers them. But I want to talk more about the consumer side, because the universal truth is that they need reasons to believe. Why should I spend my money, that much money, buying your product or your brand versus something else? So the focus is on building the reasons to believe, all right? And that is through messaging, that's through engagement, that's through activation, that's through actually journeying with them, right? To good and not so good times, right? If you're walking at them, journeying at them without that break, that builds the relationship. And we all have relationship with everything we consume, whether it's a product, whether it's a service, and people as well. It boils down to the relationship. And why do we want to believe you? Why do we want to believe in your product? Why do we want to subscribe to you? Because you do certain things to us, right? You're a friend, you're a companion, right? You give us experience, enjoyment that we cannot get from somewhere else or something else, right? So those are the fuzzy bits that's the most challenging. Everything else is just a pen or a spreadsheet. You can solve that easily, but folks are the most difficult and the most interesting part of the entire mix to be working on and dealing with.
Yeah. And I think consumers' wants and needs change so frequently as well. And I think they're having to factor in so many things as well when considering their purchases. And I read some interesting research from the IWSR recently that said while volumes are down pretty much across markets, like you were saying, people are still, they want to find quality in the products. So where they can, they are still looking to spend a bit more rather than automatically trading down to value. And so I think generally it's not necessarily a race to the bottom. And the qualities that we talked about are still really important. The storytelling, the connection with the consumer. Kim, you mentioned earlier about smaller bottle formats, and I wanted to talk to you a bit more about that as well. Is that a viable option to maintain a level of prestige and premium while offering more value to a consumer?
I would say yes. In fact, in this hall itself, I shan't mention names, but there are some smaller pack size or format that's actually interesting and very premium looking. But of course, when you start to have a value-mindedness approaching that product, you go like, okay, the big bottle cost me, say, 100 euros. And this bottle is half the size. And yet it's charging me 70. So mathematically, it doesn't work out. But with the format, the presentation, the packaging itself is premium, is engaging, is differentiated, you'll be willing to do so. Then the question or the challenge then is, how much do you actually then shrink it? So that is something that you actually have to do with design and the actual physical output or product of it. Because you can try to miniaturize things and whatever, but you'll come to a point where it doesn't quite look right. So there's a little bit of try and error, right? So that is something that's probably, I would say, unique to the different brands, because your different brand equity can help you to define what then is the optimal presentation format and the size. I mean, I want to say 150, 200, 350 is the way to go or whatever it is, but I think we need to bear in mind what the brand can optimally, realistically carry and present, and of course the acceptance of the consumer. And that reminds me of time past whereby we actually did what we call a pre-launch test, a total offer test, right? Showing them the different size, how it looks like, and then all that, and then find out both quantitatively and qualitatively what is it they prefer, and with that have a bit more confidence that it's a better bet as compared to something else. Yeah, and then of course it's also more responsible. I mean, you don't be launching a format only to find that it doesn't take off, and then you have to either take it back or the rest of the bottles that you have to dispose of it. Yeah.
I mean, for us, for existing products, we see a lot more demand for small size and big size as well.
Yeah.
But again, it depends what's your route to market. In retail shop, cavists, a lot of like magnum size. They love it at the moment. On trade, restaurant, premium restaurant, they're looking for liters.
Yeah.
Liters and 1.75. And then when it comes to hotels, duty free, a lot of 20 cl or 35 cl. As long as the perceived value is the same. So same bottle shape, same corks, same experience with the brand. So we see really things happening in the both hands, but smaller format. I mean, I had a discussion this morning with some duty-free operators, and they are selling more 20 cl than they are selling 70 cl at the moment. Yeah, no,
Interesting, yeah.
very interesting. So I think, again, it depends where you are in your development. It depends. I mean, for us, we are not launching new product in small formats, but we are adapting existing product into smaller format or bigger formats.
I think it's been great to hear the opportunities and ways of adapting and changing how you connect and do business from both of you. If we stay in the current economic climate for, a year, 2 years, what is your outlook? I mean, hopefully things will improve, but what is your outlook if this is kind of where we are for, say, the next 12 months? What's your outlook for that prestige premium end of the spirits market?
For us, I think we will remain cautiously optimistic. I cannot imagine going to office thinking, oh no, things are only going to get worse. I don't think I can do that for too long. So every day I tell myself, it will get better. And it must get better. It shall get better. And that's how collectively, as a group, as a race, we've been around for such a long time, because we've been able to consistently overcome challenges and difficulties. So having the right positive mindset is important. But of course, that doesn't mean that we don't have to deal with the realities. We just have to adapt. We just have to find the best way to engage it meaningfully or sensibly.
Yeah, I mean, I agree with that. There's one point we didn't talk about. Obviously, it's also recruiting new consumer. And what we see always happening is definitely people are drinking less. The new generation, they're not too much into drinking too much. They're more sensible. So I think there is an existing market that we have, and it's for me a short-term thing. With the new consumer, younger generation, it's kind of harder to understand what's going to be the future. Are they going to come back and be receptive to premium spirit and drinks premium spirit, or the trend of drinking less will keep on happening? So that's a new variable that's been happening for the last couple of years as well. That is happening at the same time as a market shrinking as well. So, I mean, we'll see. I mean, hopefully things will get better economically, and also younger generation will understand that drinking quality spirits can be part of a weekly of things you can do weekly. But yeah, so we'll see about that as well. I think it's something we should think about as well for the future.
A great point to finish on. Thank you both so much. We will be here for a little while longer, so if there is anything you'd like to come and talk to us about, please do come and say hello, and come join us a little later today at one of our other sessions. But Matthieu and Kim, thank you so much for your time this morning.
Yeah.